What's up everyone, my name is Anthony, and in this video I'm going to do some important updates on the broader stock markets and then dive into some specific stock picks that will help us gain a better understanding of the markets, especially at these levels. So just first of all, to start off, we're on the S&P 500, which is here in SPY, and we've over the past couple of trading days or so, we've gotten a pretty choppy sell-off, and right now we're hovering over very technical levels, and these are pretty much the make or break zones, and that will help determine what price action is coming in the future. So just to zoom out a bit before we talk about exactly where we're at, let's go back over to here. So this recent bottom around July, and this is the bottom of a wave 4, and now we're working on this wave 5 over here. So, and we can subdivide this wave 5 into this count right here. So a 1, 2, 3 up, 4 down, and then a 5 up here. And this is the main count that we're focusing on in green circles here. So we have a wave 1 up, wave 2 down, wave 3 up, and this looks like a wave for a very extended complex correction for the wave 4, and then we may push up for a wave 5 in the future, but this is on some conditions. So the reason why I have this box right here in blue is because this marks areas of 3 possible scenarios. So the first one being is that if we stay above this upper line in the blue box, this means that we can push impulsively upwards for a wave 5, just like a standard 1, 2, 3, 4, 5 sequence of a bullish impulsive wave. And that would mean we have some significant upside left to the markets before we come selling off for this larger correction. If we do come into this blue box right here and we bounce for this wave 4 of a complex correction, very extended complex correction, that means we've likely formed an ending diagonal for this last bit of the 5th wave. But I want to point out that this is not what I prefer to see happen. I don't really think this is going to happen because this doesn't really give off the structure of an ending diagonal pattern, because this wave 3 is so extended past this wave 1, and even just time wise, the wave 1 is so short compared to the length of wave 3. So if we do form an ending diagonal, it would be really hard to draw the trend lines. So let's say it does bounce somewhere within this rectangle, then we have to draw some trend lines like this, and then the upper trend line would just be really weird. It would look pretty hard to put together. So I'm actually gonna say that this scenario 2, where we do bounce within this blue rectangle and call it an ending diagonal, is the least likely scenario, and I don't want to label it as that. However, if we do fall under this blue rectangle here, and that would be the breaking point of around 437 on SPY. If we do fall below that, then we would be considered to have some bearish territory, and because that means this wave 5 impulse has somehow already completed. But if we look at this exact count, we break it down. So I want to just zoom out a little bit on this count in green, because this is a really important indicator of price action that we could be getting in the future. So we have a wave 1 up, wave 2 down, a wave 3 up, wave 4 down, and then a truncated wave 5 looks like for this wave 1. And then we correct for this wave 2, a pretty steep correction, and that's why I wasn't really targeting too much downside for this wave 4 here in green, because as you know, if you have a steep wave 2 retracement, then the wave 4 is less likely to be as steep. But so far we are getting a very steep actually retracement for that wave 4 if we are in this scenario, and I can actually point out the Fibonacci levels right here. So this is why, once again, we are at very critical threshold levels, because if we take this retracement right here from the top of the wave 3 all the way down to the bottom of that wave 2, we're hovering right around that 0.786 extension at 441, and we've just constantly bounced above it. So we haven't fallen below that 0.786 extension, and that happens to be right around where that wave 1 top is. So if we do push up from here, then I would say that we are possibly entering that wave 5 of 5 of 5 of 5, etc. But if we do fall below this territory, this wave, this 441 area, if we do close below it and stay below it, then I will have to reevaluate exactly what's going on with this count, because so far it looks fine. In terms of wave 3, as long as we get a bounce here, if we can push upwards, that is looking good. I actually am bullish temporarily on the markets because of the existence of this count. And I want to point out, so this is another reason why I'm believing in the fact that we should get a bounce here right around that 0.786 retracement level of the wave 3, in addition to just the other indexes. So I want to point out the triple Qs. So triple Qs as of now isn't really near any make it or break it zones. And as you see here, we're way above that wave 1 top. We're almost probably like a percentage or so above it, or 2% actually above it. So we don't have to worry on the Qs about breaking below some critical threshold levels. And actually in terms of retracement levels, we are right around the 0.5 to 0.382 levels, as you can see. And those are just pretty common stopping zones for this wave 4. So in terms of the tech sector, things are looking fine. This is like a perfectly normal wave 4 retracement. And I actually want to break down that wave 4 retracement just a little bit, and just to give you some familiarity with these types of corrections. So this is known as a complex correction, and this is one that has really extended a lot, and that could be it could trip up a lot of buyers and sellers because it kind of fakes people out a lot. Like, for example, the X waves and the failed impulses upwards, which are known as X waves, can trap buyers and sellers as well. So just very heavy swings in either direction. So let's start off at the top here at that wave 3 top. So we headed downwards for an ABC correction to form a W wave, then tried to push upwards for an impulsive wave, but failed and rejected, and that's your X wave. And then we came down for a Y wave, and this would form your W. And then similarly, you have that same pattern just on a larger degree, so an X, and this whole thing will be considered a Y wave down. And within this Y wave, you have kind of like a W, X, Y pattern with each leg. So each W, X, and Y leg taking on 3 wave structures. So for example, this X wave right here took on an A, B, C from what it looks like. And this is a very common pattern that you see within the X wave or just within a WXY pattern. It's kind of like a V structure. This V structure is the easiest way to make everyone lose money because you trap sellers when it bounces here, and then you trap buyers when it comes all the way to retest that all-time relative all-time high over here. So that's just a feature of complex corrections. This V structure very clearly indicates to me that we're still in this wave 4, and that if we do get a bounce here, that would confirm a potential upwards trend for this wave 5, and that would form some potential 1, 2, 3, 4, 5 structure to the upside, and then we would come correcting down for the bear markets. So I'm not calling any bear market trend yet unless we do start to fall below some critical threshold levels, especially right around 437. So if we do fall below there, then I will start to reconsider the counts and pose a different scenario. But for now, I think things are looking okay for a bounce. And another reason why, so I want to point out NVIDIA and Google. So these are very heavy members of SPY and QQQ. So when I say that, that means that when these stocks go down, this can pretty significantly affect the indexes. And I want to point out these stocks because they look like they have some more upside left to them. And that's why I'm temporarily bullish on these indexes. So let's look at NVIDIA, so NVDA stock. So let's see here. So let's zoom out a little bit, and we'll go to the bottom here. So we have a wave 1 up, wave 2 down, wave 3 up over here, complex correction for wave 4, WXY pattern, and then we move upwards for wave 5, and this wave 5 is subdividing just like the markets. So we have a wave 1 up, wave 2 down, wave 3 up, complex correction for wave 4, then we push upwards for wave 5, and this wave 5 is once again extending. So to look at that extension, I'm going to go down to the 5-minute time frame, or actually let's go down to the 15-minute. That's a little bit more appropriate. So we pushed upwards for this wave 1 of the 5. So wave 1, 2, and then we are working on this wave 3 right here, and this is very indicative of that complex correction. So just some kind of WXY, or it could be some WXYXZ, it doesn't really matter. It's some kind of complex correction for this wave 4, and then we should push upwards for a wave 5. And notice how I've already drawn the extension levels of this wave 4, and this is just based off that preceding wave 1 length that I mentioned earlier. So the 1-to-1 extension right here is right around 233, and notice how we haven't hit that yet. And that's typically an area where I would see NVIDIA at least trying to go towards. So we could see a bounce towards that level. So maybe like that's a pretty significant increase in the stock, and that would cause the indexes to bounce upwards for that wave 5 of 5 of 5. So in terms of NVIDIA, it does look like it's having a lot more bullish momentum left for the final pushes to the upside. And that's why the markets may have some more upside left, as these stocks are very directly correlated to the markets. And another piece of evidence for a potential last push to the upside in SPY and QQQ is Google. So this is a very similar stock as NVIDIA, has a large share in the indexes, and it looks like there's more bullish momentum. So once again, we have a wave 1 up, wave 2 down, wave 3 up, wave 4 down, and now we're working on extending this wave 5. So within this wave 5, we have a wave 1 up, and if you really want, you could subdivide this even further. So within this wave 1, you have like a 1, 2, 3, 4, 5. So that wave 1 up, 2 down, and then a wave 3 up. So once again, like a wave 1, 2, 3, 4, 5 for that wave 3. Now working on this wave 4 correction. And we're actually not even at that deep of retracement levels. I think we're right around, the 0.236. So this is a very typical wave 4 within Google, and we should push upwards for a wave 5 of 5. And of course, this blue rectangle is just my conservative price target zone, and this red rectangle is areas of risk when we do get up here. And I do see Google still pushing upwards to at least 3,000 or above. And notice how the 1-to-1 extension is right around 3,100. So Google seems to still have some of that bullish momentum left in it. And once again, because it has such a high share in the indexes, this would help the indexes push upwards once again. And that's why I'm still looking bullish on the S&P 500 and triple Qs. I was about to look into puts, but because we have this pattern showing up here, so let's go to SPY. So just to make things clear, when we were over here, these yellow trend lines, I thought we were forming an ending diagonal over here. So 1, 2, 3, 4. But when we fell below like this estimated trend line and we fell below this wave 2 bottom, then that invalidates that count. I did not make any trades off the ending diagonal, but that was just something I was noticing. If we do form an ending diagonal, that means that we were probably finishing up the 5th wave, and that would lead into your bear markets. But since we fell out of that pattern, that means we're still continuing this very extended wave 4. And that means we still have a bullish impulsive wave left to go for that wave 5. Because the markets really need to finish a wave 5 before they can head into downside. I haven't seen a true wave 5 yet, and I'm still looking for that. So now, enough about the markets. Now let's look at some biotech stocks. So this is MRNA. And we are still currently in a put debit spread, and I think we are right around the same levels that we entered. The stock has been pretty choppy and going down, but it looks like it has entered that C wave. So let's zoom out a little bit on the price action for this. So 15-minute time frame. So we do have a very extended list of wave 5s, and then we went down for an A wave, up for a B wave. That formed a complex correction, so a WXY, and now it looks like we're working on the start of that C wave. So, and just a heads up, when you do start to move downwards for the start of the C wave, the stock can typically have some trouble starting that, but what really brings the stock down for that wave, the wave C, is a 3 of 3. So I'm going to point that out right here. So let's see. So we have a wave 1 down, and this wave 1 down forms a 1, 2, 3, 4, 5, and this is a truncated wave 5, which is very common within wave 1s of Cs. And then we have a wave 2 forming up here, and that looks like a complex correction, so a WXY. And now it looks like we could be on the start of that wave 3. So we have a 1, 2, 3, 4, 5. And what I really need to see in the future is this wave 3 of 3 really tank the stock downwards. So that would be a really good confirmation of this count. If not, then we could be potentially extending this wave 2 longer. But the price action over the next couple trading days or so will really help us understand and confirm whether this count is perfect. So we'll also have a wave 3 of 3. You'll see a pretty large sell-off in Moderna if this is the case. And then, yeah, so we're currently in a put debit spread, so we can try to capture some of that downside if it does happen. But I'll keep updates on the stock. For now, things are looking good. So far, it looks totally fine. And we've already started to head downwards from the 0.786 retracement level right here. So we ejected perfectly off that, and now it looks like we're heading downwards for the C wave. So that's it for Moderna or MRNA stock. Still looks bearish. Overall trend is going down. So now we'll go to AMC. So AMC stock, I have a pretty detailed count of it. And since we are in on shares, I'm not too obsessed with trying to get the minute by minute details with this stock. But in general, just knowing that it's in a wave 5 of 5, somewhere around that. So just to zoom out a little bit, after we came correcting downwards after that huge pump to the upside, we bottomed out for a wave 4. And once again, this wave 4, as you can see, is really extended. It's a very long-lasting wave 4, consisting of lots of overlapping WXY patterns. And this is just to emphasize how the markets are also doing that. It's not very uncommon for WXY patterns to happen, but it is a little bit uncommon for them to last this long, but it does happen, especially in stocks like SPY and AMC. So far nothing has been invalidated yet in terms of wave theory. And now we're working upwards for this wave 1 up, wave 2 down, wave 3 up here, wave 4 down. We bounced right off those support and resistance levels that we mentioned. We're around these zones, and now we're working on for that wave 5. So I actually want to point out that this move upwards after we bottom out for that wave 4 looks to be non-impulsive. So this is a ABC pattern, and that could be indicative of the fact that we're in an ending diagonal. But I don't like calling ending diagonals when we're only in the wave 1, 2 of that pattern, because ending diagonals are quite honestly, or just diagonals in general, are pretty rare. They're not seen that often in the markets, and typically you don't want to label it as an ending diagonal or just a diagonal in general unless you confirm that price action. So the way we confirm that is if we do have, so this is the structure, we would have 3-wave move, 3-wave move, and then a 3-wave move push the upside, and that would need to go beyond this wave 1 top here at 52, and they would come correcting down for a wave 4, and then a push upward for that wave 5. So as you can see, this structure is pretty choppy and complicated, and that's why, first of all, I'm in shares and not options for this stock. And so basically, I want to see a push to the upside for this wave 3. And now I've actually moved my stop loss. So the stop loss for this trade was originally at 38. And we did take profits on some shares when it was hovering around and pushing upwards for that wave 5. We're still holding some shares, but now we can safely raise the stop loss of that play to the wave 4 bottom right here. So the moment we fall below 42.41, then I will probably be out of the shares, because that means we're not forming an ending diagonal, and that means this kind of invalidates this wave 5 pushing upwards right here. So I'm looking for a bounce, but if not, then I will not probably hold shares beyond 42. And that would still give overall profitability to the trade, because we did take profits somewhere around here. So things are looking good so far for AMC, as long as we can push upwards for this wave 2. If not, then I don't think it's worth holding any bullish positions on the stock. So that's going to be some of the comprehensive updates on just the markets, and why I think that we have a chance at another push to the upside for now. So as long as we can push above these levels, these are critical levels, and I will of course keep you updated in the Discord with what happens, especially on Monday's price action. So that's going to be a pretty defining factor in what may happen over the next couple of weeks or so. So yeah, I'll keep you guys updated, and we'll be watching what happens on Monday. So thank you for watching, and I'll see you in the next video.